What is the profit or loss for a property where the building manager reports $1,500 per month of revenue? The property was 100% occupied for the year, so there's no credit loss, no vacancy. He pays $90 per month for water and trash utilities. So annualized, there's a total utility cost of $1,080. Insurance was $1,000 for the year. The payments for the building is $9,400. Of that $9,400, $4,915 is interest expense. There's $250 in advertising expense, $775 for maintenance. Property depreciation is $2,300. There's also a capital expenditure for a heating and air unit that had a total cost of $3,500. Of that $3,500, $925 is going to be allocated for depreciation this year. There's a business bank account with a balance of $7,200, as well as an escrow account holding a deposit for $2,225. The land has a value of $34,000, with a total value for the property of $108,000. There's a remaining note balance of $78,250. Property taxes are $1,525 for the year, and the owner paid a separate income tax of $12,500. So what is our profit and loss? So first we need to calculate our gross effective income, which is different from our potential income. As we had no vacancies, our gross effective income is going to be $1,500 per month, our monthly rent, times 12, to get a gross effective income of $18,000. From there, we need to net out expenses. And so we've kind of already calculated those expenses out in a previous question. And so what you'll see is we're just taking our gross effective income that we calculated previously, less our expenses, our annual expenses. And so this is just our gross effective income less annual expenses to get our profit and loss on the property. So again, it's income less expenses gives us our profit or loss amount. Again, previously we calculated a gross effective income of $18,000. We also calculated an annual expense of $12,970. So we net those two to get a profit or loss of $5,030. This can be reviewed on your text in page 207.